Welcome to the Corporate Treasury 101 podcast. In today's episode, we discuss how automation and fintech are transforming finance with Marita Cavalcanti. Marita is a senior finance professional and currently serving as the CFO of Bound, with extensive experience in investment banking before she moved to fintech. Bound is a leading provider for effortless FX hedging solutions, helping businesses minimize currency risk by making the process more efficient and accessible through their platform. In this episode, we discuss the differences between investment banking and fintech leadership and how they shape business strategies, how automation streamlines financial processes, reducing repetitive tasks and allowing CFOs to focus on strategic decisions, the importance of regulation and risk management in fintech and startup environments, how Bound leverages modern tech to simplify FX hedging, making it accessible and efficient for businesses, the role of women in leadership, the challenges they face and what the industry can do to support them, and much, much more. We've been doing this podcast for 2.5 years now, and the most listened to episodes are always the ones talking about career and certifications in Treasury, and also on our website, it's our most viewed article. So we decided to partner up with the AFP, the Association for Finance Professionals, to offer you a $100 discount code on all of the AFP's product, including the world-renowned CTP Certified Treasury Professional course, which is the most recognized certification in Treasury out there. So if you want to get that, there's a link in the bio, or you can go to our website and find the partners page. And with that being said, please welcome Marita.
So Marita, it's really good to have you here with us. For our audience, our listeners who maybe don't know you, can you just tell us a little bit about yourself to start off? Maybe give us a potted history of your journey to becoming a CFO and some of those key experiences that have shaped your career so far.
Yeah, sure. Very happy to. Marita Cavalcanti. I'm currently the CFO of Bound. I've probably come here via not the most straightforward usual history. Started off my career in investment banking rather than accounting or audit, as I think most CFOs would start off. But for me, it's been quite helpful to get the investment banking background, have done pretty much everything in banking you can possibly do in the front office, from equity sales to fixed income derivative structuring and sales to M&A in the back end. And then since 2012, have joined, call it dark side or light side, I don't know, of Fintech. So have advised companies to start with in capital raising issues. And then through that, got into my first operational role at a company called eBury, who, funny enough, does foreign exchange risk management and hedging similar to Bound. Have joined them as co-head of capital markets. And that was really my first deep dive into something more operational rather than just advising on the side. And since then have worked for companies such as Oklo, Opportunity as CFO, which is my first CFO role, and now at Bound as CFO. So maybe not 100% straightforward and most usual, but to be fair, I think the skill sets are quite interchangeable.
Yeah, so definitely transferable skills. Absolutely. And I don't think we ever come across anyone who's had a straightforward path. Like, I've spoken to so many treasurers over the years who've just fallen into treasury by accident and similar CFO. Like, there's very few people who started off knowing that was their ultimate goal. So you're not alone. But when did you get to that point when you thought, okay, CFO is for me? Did you see someone particular in a CFO role that you kind of wanted to emulate? Was there something that attracted you about the role? Or was it just one of those things, like you say, it wasn't particularly planned and just worked out that way?
I would say the investment banking part was way more planned than the CFO part. So after uni and the MBA and before that, that was really what I was aiming for. And that was kind of the direction I was going for. So it took me a while to figure out that finance in general is something for me. But then it was more banking rather than, I've seen a great CFO and this is really what I wanted to do. Maybe to the contrary, the CFOs I've seen at the time were probably, how should I say, seemed a bit boring from the outside, all very white male, all very established. And it didn't seem like a role that would be creative in any way, shape or form, or exciting or anything like that. Obviously, over the years, that perception has changed, but I wouldn't say at the start of the career, I was really going for CFO. That's not entirely true. It was really more banking and then fintech and then getting into operations and figuring out that sort of the journey from banking into the corporate space or company space. I really enjoy building businesses, and I'm really much more coming from that side. And fortunately or unfortunately, in the end, it all comes down to numbers, no? So you do need to have the proper financial skills to build a business. And that's how I ended up in the CFO role rather than went by design. And I can't even say that there are a lot of role models right now that I would try to, aim for, build my career after. So maybe something to work on for the future.
Oh, absolutely. And I think CFO role is still predominantly white male. It's one of those things that we're working on. And
Yes.
That's part of the reason why this season on the Corporate Treasury 101 podcast, we've got all women on. So kudos to Hussam and Guillaume for doing that and for having you on. But Hussam, over to you because I've been taking the floor too much.
No, not at all, Eleanor. I mean, so super, super interesting, Marita. Can you tell us the differences that you've experienced between the investment banking world and kind of fintech, leadership, position, role? I mean, dress code is probably one of the big ones. Aside from that, what are the main differences that you've seen?
So dress code is definitely different, right? So no more trouser suits for me. I had that way too long. But I would say the major difference that I found is really in the culture, and particularly if you are joining a company of any sort, it can be very, very different. In banking, mostly the culture is fairly standard and somewhat the same. You have a very structured approach to career. So you start off as, whatever analyst, do that for 3 years, get into associate level, then VP, et cetera, until managing director in the end. In sort of startup CFO land, there's nothing like that, right? Or startup company land. So it's way less structured. And I think you need to be way more creative and strategic in a way to get to where you want to get to in the corporate space. What else? In banking, also, you have very defined roles. Also, I started in equity sales and then fixed income derivatives. It was very clear what I was doing. It was very clear what customer base I would service. And within that, it was intense and everything else. But then going into fintech was a little bit of I would say, culture shock at the beginning. Right now, it's not as much of a shock because also you get better, I think, selecting the companies you want to work with. But so the first impression was that particularly fintech is a bit like banking in the 80s. So regulation is there, but hasn't made it to the front page, I would say, of most of the company's agenda. And the benefit of that, if you want to call it such, is that you can be just way more creative on which direction you want to go into. But I think now, while having the regulatory background, it also helps a lot to bring that kind of culture, which is actually not all bad, into this space.
That's interesting. What things do you think you've brought from your investment banking role into here? And would be interesting to get both perspective of in your role as a CFO, but also in the insights that maybe you brought into the company as well, right? Into the FX hedging that's going on at Bound.
Yeah. So what skills did I bring? So it might sound very different. Investment banking, company CFO. In the end, it still boils down to financial statements of sorts, right? Whether you look at them for credit risk, for interest rate risk, or any other risk, or for advisory purpose, or for actually producing them and doing investor reporting, in the end, more or less transferable skills, I would say. So anything always goes down to basics in the end. Other skills that I can port. So look, I've advised very, very large companies on all sorts of strategic transactions. And that's certainly something that I can bring. So capital raising, large, medium, small, very vanilla to very structured, are all things I have done from an outside and now also somewhat inside perspective of a company. It is slightly different to see it from the company perspective rather than just the outside in view, which always is exciting and works for some people, for others it doesn't. I wouldn't say it works for everybody as a career path, but for me it worked out pretty well just because I like to be quite hands-on and just get things done. And yeah, I think that's been helpful for the transition for sure. And then what do I bring that other people don't have in the CFO role? Still working in fintech, right? So it's still regulated. And I would think that I can help companies like Bound, like Opportunity before, like Ebury before that, or Knowth, to avoid some of the big mistakes they might otherwise make, because the regulator is there, it is important, and it needs to be part of the culture, which at times does get overlooked in startup scale-ups.
And Marita, we've obviously mentioned Bound already. We know it's Fintech using modern tech to make FX hedging a lot easier and to automate things. But we have to hear a little bit from you about your approach to FX hedging at Bound. So give us the inside track. What are the key exposures you have? What are the challenges? How do you manage them effectively? And the key question here, is it all done via your own solution? That's what we want to know.
Long story short, yes, of course, we are only using our own solution. And the whole reason, I guess, for joining Bound in the beginning is that FX risk management for companies is really quite broken if you look at it from the outside. At my previous company, I actually did not hedge because I couldn't be bothered to speak to brokers and or banks and implement the risk management that we should have probably implemented, just because it takes too much time. And there were always other priorities that came up before that one. And frankly, not the type that likes to pick up the phone, talk to anybody, forget about your broker or banker and shout at them for, getting you better prices on FX, because I do understand a bit about FX. So I actually do know what people wanted to charge me for it. And I did get good prices in the end when I really tried, but it's just a very long and convoluted journey, not fun, and certainly something that nobody in this role, in my view, really needs. So 100% definitely using Bound. At Bound, we provide foreign exchange risk management solutions to companies, usually medium sort of sized, not super large scale corporates just yet, but everything sort of below that. So where you probably don't have 2-3 people looking after FX risk management, where you have people that their day job is not foreign exchange risk management. That's the people that we attract here at Bound. We have built a solution that is hopefully very understandable, very easy to use, all platform-based. And even if you don't understand all the FX lingo, all the stuff that brokers tend to throw at you, it should be easy enough to use. Once starting here, so the company is still fairly young. We are about 4 years old by now. So once we started implementing our own hedges here at Bound for Bound, we spent quite a bit of time on this, because also the product needed to get somewhere where it made some sense right now. So our main exposures really are, one, on the cost side. So we have employees in different jurisdictions. So we hedge those costs out for a couple of months, 6 months at the moment. We do have exposure on the revenue side, because we take a spread from every transaction, and that spread can occur basically in all sorts of currencies. So there's some natural hedge, but not only natural hedges for that. By that, I mean not all the currency exposures net each other out on the cost and revenue side. So we hedge the difference between the two in the currencies that occur. And for that, we use the Bound platform. And by now, spending 5 minutes a month on hedging, really.
That's pretty good, especially like you say, when you're one of those companies with the limited resources, or it's not your day job. It makes complete sense. Okay, good to hear. I'm sure some of the audience will be interested to learn a little bit more. But I wanted Marita just to come back to something that we spoke about earlier, which was the lack of women in CFO roles, because it is really stark. It's also really difficult to get women to come on podcasts and to engage in media just while we're having this conversation. So like a little bit of a shout out to some of our listeners. If there's any women out there who fancy putting themselves forward, do get in touch with us. But why do you think it's still so unbalanced in terms of gender in that CFO role? What do we need to do? What's the root cause? How do we address it?
So it's a really good question. And I was actually hoping over the last 20 or so years that this would get better eventually.
Yeah.
From, starting my career to where I am now. And I was hoping to have some more role model, some more women up there in fairly high positions.
Yeah.
I don't think CFO is much worse than any other of the board positions necessarily. You might have some exceptions in HR and marketing, I would say, for whatever reason. It probably starts with education. That girls get sort of bullied by boys out of taking math and computer science in school. And it really goes down from there in some way, shape or form, whereby I really think that women can be extremely good at math, and there's no reason for them not to take a more numbers-based approach to life and careers. I have 2 daughters. They are very good at math and I'm supporting them on that. So maybe the next generation is going to have it slightly easier than us. Who knows? But then also I think it sort of falls a little bit short is the support. Once you are starting to have a family, once you have kids, how does the return to work really play out after that? I think up until that point, it's probably better now than it used to be in terms of women in finance, but there's clearly a drop-off in the more senior positions. And I have high hopes that actually with COVID and everything else, that is going to change, because what I did notice over the couple of last years, 4 or 5 years, call it, is that men take much more responsibility at home, which is the first, I think, step that needs to happen, because otherwise we'll always have this issue and we'll always have the women needs to stay at home kind of attitude, which I don't agree with. Anyway.
Down with the patriarchy. Yeah, so, this is the kind of chat we wanted on the podcast.
Unfortunately, mainly worked with men in my life. I'm very used to it. I'm not scared of it anymore because I've done it for such a long time. But what I did notice is that the men I do work with take much greater responsibility for home issues lately than they used to. So when I started in banking, it was definitely not accepted for anybody to take paternity leave, other than maybe 2 weeks. That was pretty much that. Now that is very, very different. And I think once you have sorted out the post-baby responsibilities, which really can be taken on from men and women, there should not be any huge gap difference for the career after that. But we do need to get there still.
Yeah.
I hope nobody sits here in 20 years' time and still tells the same stories to people.
That's the thing. It's making the change. And there's a couple of things that worry me. Like there's been a lot of rhetoric around return to office recently, and I do worry how that's going to play out. And I also am quite concerned around the AI side of things, particularly with generative AI. When you look at the images and you ask it to produce an image of a CFO, guaranteed like 95% of the time it's a white man. And that is because obviously the AI has been trained with biased data and all the rest of it. So there's a few things that I'm kind of concerned about in that capacity, but also hopeful at the same time. So Marita, with that in mind, do you think there's anything we need to be doing as an industry more to better support women? You mentioned what we can do from a kind of societal point of view, but do you think there's any kind of initiatives that we need to get out there, anything that we can do collectively to make this happen?
Oh, I think there are a lot of things we can collectively do to make this happen. What I feel, and maybe you also have an opinion on that, Eleanor. So basically, at the start of my career till, let's call it 10 to 5 years ago, there was a very, very strong emphasis on diversity. Maybe it is because I was in banking for most of that time. We had lots of seminars on, biases, all sorts of things, all about inclusion, because that was the way that I think the public, the investors and everybody else wanted the companies to get to. So I feel that emphasis has dropped off quite a bit. I don't hear that much anymore about women in anything. I mean, there's women in treasury, there's women in finance, there are all sorts of things, but not inside the companies really, right? So I think one thing is just to keep it up and not get bored of all the initiatives and just, unless the issue is fixed, let's not give up on it. And the one frustrating thing I find is that, women should not be a minority. We're 50% of the population, more or less. So talking about women as a minority kind of doesn't represent us well. So maybe keeping that up. And the other thing is really men taking responsibilities at home. Yeah. So I was lucky enough that I had enough money to outsource a lot of things at home, but not everybody has that and not everybody wants that. So unless we have shared responsibilities for not just home, but also work, nothing is going to change.
Never going to happen. So, no, we'll keep plugging away. We will.
That's it.
Yeah. If anyone's listening, there's also, a Women in Working Capital group that is set up. It's in the UK at the moment, but we do have some international members. And if anyone's interested in joining, find me on LinkedIn. I'm easy to find, and I can make you a member. It's free, and we just meet up and we share stories and we share career advice. So we'd love to have you there. So
absolutely amazing. We'll put a link to that in the show notes as well. Marita, on that point further though, it's really interesting that I kind of hadn't noticed it until you said it there, but now that I think about it, I think you're right. The whole rhetoric around being more inclusive and these kind of things, it's really not as prominent as it used to be. I think you're right. I do think there's some more, you see more women-only panels for example, at treasury events. So I guess it shifted to be there, but not like spoken about as much, which is perhaps the fault, right? What initiatives specifically are you referring to which you would love to see brought back more, or that you've thought were the most effective in doing this kind of work?
I can't give you any effective one because obviously we're still here talking about it. No? So that's number one. So we probably have to be a bit more creative on what actually works and what doesn't work. So what I also get is that if you talk about things too much, it gets, redundant and people get bored of it and nothing ever happens because they don't ever talk to me again about all this diversity stuff. So I think it needs to be quite pointed. There need to be fairly clear targets and what companies want to achieve, as in, unfortunately, it needs to be some sort of number-based target, whatever percentage, hopefully 50% of women on boards, in finance roles, in tech roles, in HR, that open space for men, by the way, I think, generally speaking, and marketing and things like that, so that everything is a little bit more balanced and just make it very measurable, because I think you can talk about a lot of things for very, very long hours, but nothing ever happens. So do put some OKRs or KPIs in place also for the diversity side of things, not just for your financial targets.
I think that'd be a great topic in general to talk about. What are the KPIs that should be in place, right? And so might be interesting to do a segment on that in the future about KPI setting that could drive a more inclusive workplace, and specifically what those are.
Yeah, we could get a couple of people together maybe and have a little bit of a debate going on. That might be quite cool.
Sounds good. I like that. I like that idea. Moving towards somewhat relevant topic, Marita, so every successful CFO or any leadership has a successful team behind them, right? The common thing is you don't really do much. Your team does most of it. You just direction set, inspire, and create clarity in a lot of ways. What's your take on the team that you've built out as a CFO now in your leadership position? And what's been the key aspect of that for you in building a successful CFO team?
Very good question. I think you just do strategy and direction sounds ideal. It's not my case. Let me put it that way. So if you are the CFO of a very large company, even, I think you still need to be fairly hands-on and understand from the ground up what the team is doing. And I think that also influences team building to a certain degree, to make sure that you have the right team under you, but you still need to unfortunately understand what every function is doing, how they're reporting, and so on. So for Bound, because we are a startup scale up, obviously I don't have a massive team to rely on. But what I can tell you is that, one, and you might not like to hear it, but I'm going to say it anyway, I prefer automation to people, sorry to say. So whatever there is to automate, I do automate, and I use either in-house build or third-party systems to support in the treasury, bookkeeping, accounting, reporting, FP&A function. So whatever there is that human beings shouldn't be doing anymore, in my view, because it's too repetitive, just outsource to a computer, right? Simply said. So I think automation is one of the ways forward. And also managing big teams. I have managed fairly big teams in my past. I don't want to do that again, frankly. So it takes way too much of leadership time to deal with people issues, whereas you really should spend time on business building and getting things done rather than sorting out fires because one of the employees has an issue with another employee or whatever it is, or it's not working hard enough or wants to work from home all the time or whatever it is. No, so anyway, so that's the long and short is, I guess, more people, more issues. So I'm trying to keep it as lean as possible. But what that also means is that the team I built needs to be working in a very, very efficient way. If it's not working out, it's usually my fault, because I haven't set direction well enough. If I haven't put controls in place, I haven't put the right processes, procedures in place, and I haven't given enough education. So one, obviously recruiting also quite important. Find the right people for the right job. Doesn't necessarily mean, and that I learned over time, that people have done the roles before that they're hired for. I think what's way more important is that the attitude is there, the cultural fit is there, the openness to, when crunch time hits, work harder is there, rather than, okay, I want a particular role. I'm going to do that really well. I know exactly what I'm doing, kind of. So for me, it's usually worked better to hire slightly more junior people, give them some education on the job, get them ready for it. And then the team is, I think, hopefully in very good shape, while also having enough exposure to other functions. So I also think that with automation, obviously it sounds scary and it's usually bad because it means headcount reduction rather than an increase. But I do think with that comes more interesting work for the employees that are there, because you don't repeat tasks all the time, because it does just not get boring, because you do need to think more strategic rather than just transactional.
So I like that, because the less manual tasks which a robot can do or any kind of automation can do, the more your employees can feel like they have a much more engaging role and a much more engaging career aspect, right? They can add value as opposed to just generating reports or crunching numbers, which is just like procedural in a lot of ways.
Exactly.
Which overall leads to happier teams and better performing teams, right? And also better retention of talent, which is a big problem, right? Like keeping good talent is really good. One company I worked for put this really well. They said that the overall employee value equation is salary is only one aspect of that. Salary doesn't keep people in a job as much as an engaging role does. As an employee, I always used to think, okay, that's just their way of not paying us more and saying that, yes, we're not the highest. We used to be like, okay, they're just saying, oh, yes, we don't pay you the most. We're market competitive, but we focus on an engaging career. And we were like, yeah, sure. But like being on the other end of it, having my own team now, I can definitely say that like if paying them more kept them, I would pay them more. Simple as that.
Yeah.
The data doesn't back it, and my own personal experience doesn't back it either. People enjoy career opportunity a lot, and they enjoy like actually enjoying what they're doing day to day and having an engaging role. I think that drives, and salary is important, of course, but it caps out very quickly, I think, how much that sways the decision.
I would very much agree with that. If it was just for salary, I would still be in investment banking. Let's face it. So.
That's a great example. That's a great example of that. Exactly.
It's definitely not everything. And there's so much more to satisfaction at the job than just, the number that you take home at the end of. But I'm not saying it's not important, same as you. There is definitely some importance to that, but it's not the only thing. There's so much more that creates a good culture in the company and 100%. Ultimately leads to staff retention, hopefully, than just the salary.
Super clear. Love that conversation, Marita. So coming to like treasury, which is what we're all about, all right, which is what this podcast is meant to be about. We've talked a lot about CFO and women in high positions. And tell us your experience of the CFO treasury relationship. Now, of course, you don't have treasurers helping you with FX, or in that regard. I hope largely most of it's automated, so I guess that takes it out. But would you say priorities of the two roles are usually mismatched? And if so, how? For example, one thing that comes up quite often is cash flow forecasting, where CFOs might prefer more of an indirect report, for example, while treasurers prefer more direct one. That's just one example. But have you ever seen that tension between the CFO and the treasurer? And if so, how do you overcome it?
That can certainly be tension. Let's face it. No, so it's not necessarily that always all the, incentives are aligned for the CFO and team treasury. So you mentioned the cash flow forecasting. I personally quite like the direct approach, but more for shorter dated time horizons. And then once it gets out a bit longer, then indirect makes way more sense in my point of view, not just little bits and pieces. But I think what is really important is that the leadership of the company has a proper KPI/OKR framework in place that sets the incentives for the entire company, not just finance, CFO, treasury, but also all the adjoining businesses, whether it's marketing, sales, operations, etc. So everything and everybody needs to feel part of a bigger team. And in the end, I would say if treasury and CFO aren't aligned, probably time for different management style, because in the end, we all want the same. No? We all want the company to thrive, and we want to have data that we can rely on in order to manage the company better and run it better and create business plans that make sense for everybody from top to bottom, basically. So I have seen quite a bit of friction between treasury and CFO, but I do think it's solvable if you have the right structure in place.
Tell us a little bit more about that, Marita, because I think there's so many examples where those competing priorities don't necessarily align. We see it a lot in the surveys, actually. So the PwC Global Treasury Survey, they have CFO priorities and treasurer priorities, and they're always like pretty much upside down. So how do we go about bridging some of those gaps in communication? Any key learnings you can share from your career for our listeners out there who are predominantly treasurers?
Well, first of all, communication is key. I would say that, because without communication between the teams, nothing else is ever going to change. And then the other thing is how to communicate. So when I went into companies in a slightly more senior role, obviously it's important for me to make sure that the teams that I manage know what I expect of them.
Yeah.
But in order for me to even know what to expect of them, I need to know what they're doing at the moment first, right? So there's a little bit of give and take here, where you as the senior person coming in can't just say, okay, we scrap everything that you have done before and now we're running the opposite direction. Just never works. No? So if you come in and you spend the time and understand how the processes work and what's currently done, as in establishing some sort of status quo, that has usually worked quite well for me to just acknowledge what people are doing, how they're doing it, why they're doing it. And if you understand that, maybe reflect and tell them why you want to change what you want to change.
Yeah.
And get the buy-in from them. Without the buy-in, it's never going to happen anyway. They'll pretend to work one direction and not really do it anyway. So I think you do need to communicate, make sure you really understand what they're doing. And sometimes competing priorities also arise because the treasury team might want to report directly to the CEO rather than the CFO, if that, or the founder of a company, for argument's sake, and just do what that person tells them to do. In the end, it goes down to management needs to align from the top, and then you need to understand what the team does bottom up. And there are, I think, very few situations where you can't match everything in the end, but it does take effort and time to align everything.
Yeah.
And structure it such that it does actually work in the end.
Yeah.
In the end, if the CEO doesn't get the data that he can build his decisions on in order to really shape the direction of the company, go, this business line, the other business line, internationalization, left, right, or center, something like that. Without the right data, nothing really happens. And that's Team Treasury's responsibility to get the data right.
Uh-huh.
And that's, I think, one of the learnings from not being in banking anymore, but being more operational, to actually see that the data can look vastly different depending on how you compile it and how good the in and output is of that. And,
absolutely. And then how you present that as well. There's a whole skill set now around data storytelling, which is fascinating. And treasurers having to learn completely new skills, and something that I'm getting involved in my new role as well, because it's sort of translating things into the language for the correct audience that you're speaking to and how you present those. So there's lots of new things that treasurers are learning, and hopefully it will improve that CFO dynamic as we go along. But Marita, while we've got you here, I wanted to pick your brain a little bit on the fintech side of things, because obviously you're immersed in that world. So how do you see fintech actually shaping the future of the treasury function? You spoke about automation, etc. earlier. Maybe you could share some examples of what you think it could do for treasury.
I think it could streamline a lot of things that are still done manually at this stage in most companies. So automation, for me, it's key, but it's also key not just to reduce people, as said, but also to create more interesting jobs for the future in treasury.
Yeah.
At times a little bit frustrated because I want to have a tool and I don't get the tool and it's not out there in the market and I still have to copy paste stuff into spreadsheets at times. So it would be really nice to just have something that works. And I do think the future is going to come up with something that just works and creates that in much less convoluted ways than we currently see. So anybody who ever has implemented a treasury management system or some ERP system or changed accounting systems probably knows it's a major project, it's a major pain, and it really should not be as much of a pain. And usually it's a pain because the companies that produce those systems want to have their consultants employed forever. So if you have the lovely consultant from company XYZ, not to be named, in your office for the foreseeable future, and try to sort things out that should have been sorted in the beginning. So hopefully we can get better with AI and with everything else in trying to get exposure definitions out. So what are actually the risks of my company, where I see most of the things falling through at the moment. Cash flow forecasting is another really good one. Super key, should be the core of every company, every business. But there's still so many kinks in, when is cash actually cash? Where does it come from? When do I count it as cash?
Yep.
Very simple things like that. But in the end, it is about cash, not about EBITDA, whatever it is. So I would see and hope to see tools that can really generate proper reports, getting the data in properly from the source, whatever the source may be, and then crunch it in a way that is understandable. And to your point, and not get the output that everybody can read and understand in a somewhat comprehensive way.
Yeah.
So I hope for lots of good news on that side of things.
Oh, so do I. And it's exciting to watch it all happen as well. But there's a lot of people who are very worried about all of the tech change. So I conducted an AI and Treasury survey over the summer. And there were so many people concerned about the change of AI replacing humans. There were people that were like quite happy with their paper checks and everything going on there. You know, there's a whole spectrum. There were some people who were very firmly in your camp and others that were completely at the other end. So what would you say to those CFOs and treasurers who are in organizations that are not as tech savvy as Bound? They're a little bit more conservative, or they have their own reservations around all of this change that's happening?
Yeah, first of all, I think I'm actually very conservative. I do like tech and automation, but I think from a base persona type, I'm like as conservative as you can possibly be when it comes to finances. But I do hate paper, and that's maybe more personality things than anything else. So I lose paper. So if anybody gives me paper, like our lovely banks send us, even though I have told them not to, paper bank statements in the mail, things like that, and I talk to them, so I will lose it. But I do understand that there are people that really love paper and will not lose it. I will have a fantastic filing system to always find the paper that they have received from anybody else. And look, if it works, it works. I don't think there's anything bad about it, as long as you can be somewhat efficient. No?
Yeah.
And I am probably on the tech spectrum on the fairly far end in terms of embracing tech. So when people ask me things like, do you trust the cloud? Like, well, I trust Amazon more than myself to manage a server, right? And the security around that. So probably a bit more on that end than most people.
Yeah.
But not blindly trusting anything, because with any tech come new security issues, right? So
of course.
There's that, but somebody stealing paper from your cabinet, probably more likely than somebody stealing data from an Amazon warehouse in wherever it is.
Yeah. I hear you and I'm with you, and I'm glad I'm not the only one who loses papers. You made me feel better now. Dreadful. I'm not a paper person. It doesn't work for me. Anyway, good stuff.
It's interesting to hear that perspective. I mean, I guess you're clearly in the right space. If you're more technology bullish, then fintech seems like the right place to be. Makes a lot of sense. And I guess one of the advantages you have to your problem of you wish there was tools is I guess you have enough programmers around you to build tools just for you as well to solve some of those nagging issues.
Yeah, no, there is that, but it's about priorities like everything.
Yeah.
So I need to fight with my product colleagues that obviously want our engineers to build product for customers rather than for the in-house function like me. There is that, but definitely resources are available if you can fight for them and you win the fight.
I mean, all of this is a skill, right? So I'd love to come over to like the skills of a CFO or finance leaders in general. What skills do you think are lacking in the marketplace for finance leaders across the board? Well, that could be soft or hard.
Okay, let me start with the skills that are usually there are the technical skills, I would say. So every finance leader I've ever met knows about accounting, bit of tax, bit of everything that is required for the day job on the reporting side, forecasting side, etc. Where it gets a bit thinner is probably on the strategic side, as in when you look at capital raising, what kind of capital should I raise? When should I raise it? What are the right investors to bring in? So there it already drops a little bit, and you can perfectly outsource and hire consultants for that or bankers, fine. But make sure you hire them at the right time and the right cost, I would say. And then in terms of just making sure the finance function is central to the business you work with. So that's more the softer skills, I suppose, to have management buy-in, that everything that gets decided in a company ultimately evolves or involves at least finance. So I think the management skills on that, upwards, downwards, sidewards, probably also not always 100% there.
And would you see that as so what I'm hearing, Marita, overall, because I want to translate this also to people that are aspiring financial leaders, right? the technical skills are a must, is the
Yes.
typical advice. You need to know the technical skills. You need to understand all about FX, all about hedging. You got to understand Excel. You got to understand the numbers, right? You got to be good at the numbers at the base. And then what sets you apart is a bit more the soft skills, the management up and down, right? That's the typical advice we get. Anything you would add to that for aspiring finance leaders?
I think for any leader in any case, the sort of balance between EQ and IQ is super important. And that's also super difficult to get right. So look throughout my entire career, the most successful people had both in good enough amounts. You don't need to be a superstar on the IQ side of things. You don't need to go too far, but at least to a certain degree, it needs to be there. And with that, common sense needs to be there. And same on the EQ side. So at least have a little bit of empathy and understand what other people are thinking, doing, and why they're doing what they're doing, or saying what they're saying. And I do think in the end, both EQ and IQ are literally 50-50 in terms of what defines career success. So I'm a strong believer that you do need both. And obviously, depending on which education system you grow up in, you tend to have more of one or the other.
Yeah.
So try to match it as much as you can.
It's really hard to get it right, though. It's so difficult to get the balance right. I find like I'm a real soft person and I'm probably a really easy touch. And so when I'm managing a team, like I have so much understanding of how they're feeling and the pressures. I find it difficult sometimes to push the deadlines because I know, how stressed they are. That is my biggest issue is being too soft-hearted.
Yeah, but you probably have your own way of getting them there.
Yeah.
Because they will empathize with you as well, and they will make sure they'll get the deadlines done because they know you'll be in pain otherwise. So
true.
So I don't think there's one style that fits for everybody.
Yeah.
But I do think that somehow you need to work with what you have.
Yeah.
And try to achieve the goals and targets that unfortunately are always going to be there. And there's always going to be pressure and there's always going to be stress.
Yes. Oh, yeah.
There are always going to be management issues with whoever, up or down. And you just, I think, have to be able to live with that. And what I would also say that in any leadership position, if you don't have resilience, don't go there, do something else. And that's fine. By the way, you don't need to be a leader. No? So not everybody can be a leader. Not everybody should be a leader. If you're very happy in your individual contributor role, maybe that's your way. And you can be super successful in that without trying to manage people.
Would you add any specificities to that, Marita, for fintech as an industry? Is there anything like unique to that industry that you'd bring further?
I would say not that much in terms of the soft skills, other than maybe real resilience and really being able, because it's quite a tough environment. No, it's still very, very male driven. It's fin and tech, right? So you do get what you get. So don't be afraid, but also don't let yourself be pushed around, away, or anything else. So you need to have that attitude of wanting to make it, and it doesn't matter who else is there around you. And the other thing I would say is that some number skills definitely needed in fintech. So, and probably more so than in most other industries, because in the end, it comes down to finance, right? And your product is finance of some sort, whether that's credit analysis, whether that is you building a trade finance platform, whether that is you providing hedging solutions to other companies or individuals or whatever. There's always that underlying bit that boils down to numbers. So if you're not comfortable with numbers, don't try fintech. Maybe not even in HR, I would say, because it's a very number-driven industry.
Probably not one for me then. I just maths doesn't come easily to me. Like, did okay in my exams, but very much more a language creative person, and that is fine. But Marita, with everything that you've spoken to us about today, you've mentioned you're trying to get some of those internal resources and directing them towards what you want to happen. What would you say are your goals and priorities for the coming 12, 24 months, and what are your plans for reaching those?
Next 12, 24 months, good question. So we are at Bound at, scaling quite quickly. So goal number one, do not fall over, no mistakes, no big mess ups, none of that. That's really goal number one. And I think hopefully we have that under control.
Yeah.
Then number two, make sure that we have a really coherent strategy on how to grow from here, because people in, I think, all growth industries will know that lots of things change. The market changes, the customers change, banks change the way they see the world. So we need to keep on top of all of those changes around us and find the best way to grow within a very highly changing market environment, but also internal environment, and make the most of it and grow a lot.
Yeah. Have some fun
maybe
along the way.
Have some fun on the way, but have some fun, grow fast, don't fall over. I think those
sounds like a good
those
plan.
Probably are the ones to target in the next 12 months to 24 months, and then obviously be the biggest fintech on the planet at some stage.
Oh yeah, well,
maybe in 3 years' time. Maybe in 3 years' time.
Awesome stuff. Well, good luck with it all. And we look forward to seeing how it all pans out, and we have to maybe put a note in the diary to catch up with you in 12 months' time and see where it's all moved on.
Yeah, fact check me then. Exactly.
Awesome. Cool. Thank you. I just wanted to